So our speaker is already here. Haridas ji will take on tax audit. So for that, I'm inviting our past convener, Mahesh Bagaria ji, to give a brief introduction for our speaker, followed by memento as our token of appreciation.
Everybody settle down. Yes. Thank you, convener. आपने आदेश दिया आज हमारे पुराने सहयोगी हरिदास जी भट्ट का इंट्रोडक्शन देना है, लेकिन मुझे मालूम है यहाँ 99% लोग उनको काफी सालों से जानते हैं, तो वो 1% के लिए मुझे जरूर बताना पड़ेगा कि व्हाट ही इज। तो फ्रेंड, हरिदास जी भट्ट इज ए पार्टनर इन GMJ एंड कंपनी, जिसमें अपने संजीव महेश्वरी जी, प्रभात महेश्वरी जी सब लोग पार्टनर हैं। इन्होंने बीकॉम किया बॉम्बे से। हरिदास जी बॉम्बे से नहीं किया, उडुपी से किया। So he belongs to Karnataka. He became the member in 1986. यूनिवर्सिटी ऑफ मैसूर किला। इसके लिए अभी उधर लेके जा रहे हैं क्या, हम्पी वगैरह? स्पॉन्सर यही करेंगे 50%। हाँ, याद रखना है, पकड़ लेना। 100% नहीं देंगे, इतना पेनल्टी नहीं होना चाहिए। So friends, he is specializing in income tax matters, as we all know. He is regularly attending IT/AT matters, co-opted members of WIRC during 2008, 2021, 2022. WIRC तो बुलाता ही रहता है। Plus ICI Central Council में भी थे 2012 and 16. He has contributed the budget booklet and the referencer of WIRC, apart from our study circle. He is the expert advisor in the संवाद विश्वास का जो इंस्टीट्यूट चला रहा है, संवाद विश्वास का WIRC. He is a member of direct committee of Chamber of Income Tax Consultant. He delivered lecture in WIRC study circle on income tax matters. Core committee member in JB Nagar since 2002-3. 23 साल हो गए। Convener of study circle in 2007. Winner of Times Business Award, that is a prestigious award, in 1921. Mangaluru, Mysuru, Hubli, and Excellence in Financial and Tax Advisory Awards. He is an independent director in various listed entities and trustee in NGOs. ट्रस्ट का भी गुप्ता जी ने बताया ना, तो ट्रस्टी भी है so many places. बाकी इनकी लिस्ट तो 4 पेज की है, लेकिन मैं इसको 1 पेज में शॉर्टकट करूंगा, चलेगा सर? आपको मौका। So friends, please welcome Mr. Haridas Bhat on the important topic of tax audit, for which we are waiting because 31st जुलाई चला गया, अभी सितंबर अक्टूबर आने वाला है, तो ध्यान से सुनिएगा और लास्ट तक सुनिएगा। थैंक यू। मोमेंट तो आया सर,
दिखना चाहिए था, बढ़िया है पीछे सब। ये
मैं थोड़ी ना ले
Good morning, everybody. So when convener told me you have to take a lecture on tax audit, I was telling what is the change, what is new. Anyway, but now how I scheduled, I've structured my lecture today is I'll take up the points first, because even after so many years also I get many calls from the members on the applicability of the audit, 44 AB, AD, ADA, etc. So we'll take up that points first. Then I have prepared slides on the clauses, also important clauses. So that I'll take a call by looking at the remaining members at that time. Otherwise the slides are self-explanatory, that convener will definitely distribute among to you. So this 44 AB is the old one. Can you tell me, anybody tell me when it started? It is in assessment in 85, 86. And that is the year when I passed out. So that time tax audit was the fresh, you need to take a lot of time. Because those days in the tax audit, 90% of the time of the tax audit used to take in a calculation of traveling allowance and disallowance, 6PD. So that was the biggest chart and it used to take a lot of time. Thankfully, those all nonsense are not there now. Now things have actually, I friendly, it's easy, and along with the audit, you can cover a lot of the tax rate points. And when there is no audit, then you have to take separately. Life is much more simple. Now I think the biggest data to be filled is the TDS, but that you can directly import from the console file. So that is not that difficult. So let's start with the threshold. So remember that default threshold even today remains at 1 crore. And this 1 crore, many people have confusion regarding the TDS applicability. So many people think that if there is no tax audit, there is no TDS applicability. That's wrong. For the TDS applicability, turnover is 1 crore and 50 lakh even today. That has not changed. And even the 44 AB also, basic threshold limit still remains at 1 crore. Now enhanced threshold of 10 crore where both cash receipt and payment does not exceed 5%. So that's how to work it out. I'll have a separate slide for that. And that is non-account paid checks and draft are deemed to be cash for the 5% debt that you all know, because barrel checks also as good as a cash payment. And the rupees 10 crore relaxation is under 44 AB and not confined to the 44 AD cases. AB and AD, don't confuse it. These are two, there are multiple limits now, we'll come to that. So 44 AB threshold limit is 1 crore. More than 5% cash receipt, either receipt or payment. And it is, then it is less than that, it is 10 crore. Then let's briefly go through this 5% test. The statutory body uses the aggregate amount received and aggregate amount payments made. Don't be, I think now it is old one, you must be clear, but don't be under the confused impression that it is a 5% of expenses or 5% of the income. It is not the case. It is the receipts and payment. Distinguish these from sales, turnover, and gross receipts. And receipts and payments have to be tested separately. You can't club it and separate. Receipts are separate, payments are separate. And test the cash receipt and cash payment independently. Both must be within 5%. If one thing crosses 5% also, your 10 crore limit is not applicable. Treat non-account paid checks and draft amounts of payment to the cash. We discussed that. Use bank cash, loan, capital, asset, investment, tax, and clearing account data. You have to get the full data, full bank data. What is the cash withdrawal? Now here, if in case of partnership firm, if the partner withdraws the drawings is in cash, that is not covered. Otherwise, withdrawal from the bank and deposit to the bank from all accounts are covered. And retain the numerator denominator reconciliation for each test. That's how you have to do. Exclude. Don't confuse with the capital and receipt or investment and asset purchase, etc. Total cash and for the total payment. That is the total cash divided by total payment is more than 5%. Then your 10 crore limit will not apply. Now there are some examples we have done. What may enter the receipts and payment denominators? Receipts, cash and other receipts collection from current and prior year debtors also. Remember that. It's the debtors. It's not restricted to the current year. If you record some earlier year's money in the cash also, it will come into this place. Loans, borrowings, customer advances, and capital contributions. Even in the case the capital contribution is done by cash, which is not covered under any of the restrictive sections. So that also is covered here. Then proceed from fixed asset and investments, GST collected and other taxes received also. It's not restricted to only your sales or refund, including the GST and all taxes collected. Receivables are not received until realized. For this purpose, you have to go by the cash basis, not on the month-end basis. In payment, similar thing, cash purchase expenses, payment of current and pre-approved creditors, loan repayments, supplier employee deposit, advances, fixed assets and investments, GST and other taxes paid, capital returned, drawings or distributions were actually paid. Contributions received from partners, shareholders belong to receipts and not payment. Turnover was 5%. So it's not the turnover, it's the gross receipts. So that is what the important point here is. Measure business sales, turnover or gross receipts for 44 ABM presumptive basis. Sale of fixed assets or capital investment generally does not form the business turnover. Agency receipts may be limited to commission, where the assessee acts for the disclosure as principal. We'll come to that turnover. There is one more slide on the how to calculate the turnover. And aggregate amount received paid will be 5%. Proviso uses the broader receipts and payment population. Capital, financing, tax and balance sheet movements can affect the ratio. Do not derive the 5% ratio merely from cash sales divided by turnover. This was the major mistake we do. Don't do that. Document inclusion and exclusion consistently on both the sides. This regarding the 5%. Now we will go to the turnover. What is turnover? Because your tax authorities depends on your turnover. What is turnover? Turnover difference from different cases. Special turnover cases, commission, consignment agents and clearing agents. That is, for a true agent, turnover is ordinarily commission. Principal transactions need separate analysis. There is a agency business is different, consignment sales are different. So for a true agent, turnover is only in commission. Then share brokers, speculative transaction and derivative options and futures. Speculative turnover is the aggregate of favorable and unfavorable differences. Speculation as well as F&O, that is the principle you have to follow. You may be having profit and loss. Net figure may be either profit or loss. For the turnover purpose, you have to remove the sign and sum it up. Now, even today I get the call for this. Am I covered under audit or not from F&O? Then still people have got the impression that F&O turnover is the total your contract value. It is not the contract value, it is the settlement value. Speculative, we discussed that F&O turnover, same thing. And for travel agent acting as only as agent, commission and service is only usually a turnover. There are so many agency businesses where turnover, for example, share brokers, their turnover is not the share sale and purchase, although invoice is for the full share sale and purchase. For the turnover, it will be only their commission, which will be the turnover. Even the GST is also charged only on that. Similarly, for the travel agent, the ticket cost is not their turnover. And if they're selling the packages, because GST rules have become very complicated. You got different ways of selling all the traveling and tour products. So if it is on commission basis, only commission is turnover. Similarly, for the CH agents, they pay on your behalf. They pay huge customer is also on your behalf, and they invoice for that. But that is for recovery of expenses. That doesn't part of the turnover. Only the agency commission is the turnover. Now profession, that is the actual threshold. Here also threshold, there is quite confusion is there. 44 ABB audit threshold remains gross risk actually 50 lakh. That is 50 lakh still remains. Now 44 ADA it is increased to 75 lakh. 44 AB it is 50 lakh. For ADA it is 75 lakhs in case of low cash receipt. That will come to the cash receipt separately. So do not replace the audit threshold with the enhanced 44 ADA limit. Remember that. And classify business worth of profession before applying the threshold. Profession and business, these are the two different things. But the biggest problem lies to everybody is for the technical services, the engineering services, etc. That classifies as a business, not as a profession. But people deduct tax under the profession. When the TDS is under the profession, if you say not as a profession as a 44 AD, then there is a good chance that you may be caught on the wrong side. And plus, you can't change the people who are deducting tax at source because they always take the safety first. So they don't want to take any chance of deducting at a lower rate. And for that, the option is you go for the LDC. All the majority of the engineering service people, ITES, they go for the LDC, low deduction certificate, because people deducted 10% and the ITES do not have the margin of 10%. They don't have the profit margin of 10%. So without LDC, they can't function.
About BSP, part of the.
Then we'll come to that. There is a separate slide for that. We'll come to that. Selecting the correct clause for 44 AB. A relevant clause list: 44 AB is business turnover. ABB is professional gross receipts. ABC lower profit under 44 AE, BB and BB. And 44 ABD low profit under 44 ADA and income except above exemption limit. And 44 ABE section 4484 applies and income exceeds the exemption limit. Now I'll be sharing the slide. You do not take the photograph. So current reporting level is the 5 statutory regimes remains the core selection of clause 8. So when you select the tax rate also, you get the drop-down menus. You have to select one of them. You have to confirm the limit against statutory status, turnover, presumptive position, and total income. And where amounts are audited under any law, Form 3CA may apply. Record the conclusion before assigning the form on the portal. So you have to, and we'll come to the separate slide when there is multiple business involved, etc. But here you have to pick up the clause which is applicable to you. Let us see the business tax credit decision tree under 45 ABA. Business turnover gross receipts exceeds, business turnover gross exceeds rupees 10 crore if between 1 crore and 10 crore are both cash test within 5%. Conclusion: about 10 crore audit applies under the section 44 ABA. Once you cross a 10 crore, this all tests are immaterial. If the turnover does not exceed 1 crore or clause CDE is still triggered. This is a common question I receive from many people, that if it is less than 1 crore but my profit is less than 6 crore, am I covered under tax audit? In the under 44 AD, it is not there. Earlier it was there. Then 2020 onwards, it is not there. ADA is still there. If you are less than 75, 50, less than 50 lakh, then if you do not have 50% profit, you are under audit. ADA is there. ADA is not there. If the turnover does not exceed 1 crore, yeah, is rupees 1 crore to 10 crore, audit applies if either 5% test fails. Other than that, there is nothing. Within both 5%, no audit under clause A, but the test, you have to test the other links, whether you are covered or not. So below 1 crore, clause A does not apply. Am I clear in this, or did I confuse anybody?
What of CA will be covered in ADA? Hello?
CS will be covered under ADA.
Yeah.
And plus in ADA, what is not covered is commission and brokerage. Commission.
When profit less than 50%.
If the CA shows less than 50% profit and his turnover is less than 50 lakhs, then you're covered under tax audit.
That's very important.
Yeah, that's and more than and up to 75, you are eligible to go without showing the expenses, claiming the 50% up to 75 lakh, and beyond 75 lakh, you have to get audited. So, bottom line of the professional says if you are showing profit less than 50% and if you are below 75 lakh, you have to get the books audited. 44 AD presumptive business income reporting requirement ceiling of is rupees 3 crore where cash receipt does not exceed 5%. Otherwise, it's 2 crore. So there is 1 crore, 3 crore, 2 crore, 10 crore. So they said for the business people, there are 4 thresholds. So where cash receipt does not exceed 5%, up to 3 crore, you can go by the presumptive method and offer 6% or 8% as the case may be. 6% for the check payments and 8% for the cash payment. And if your cash threshold exceed 5%, then your limit is 2 crore. Up to 2 crore, you can go for the presumptive. Beyond 2 crore, you can't go for the presumptive. Rates is same thing. For the cash, it is 8%. For the non-cash, it is 6%. No, this is one problem which I think 20 started or whatever it is. They stopped the partners remuneration. So no separate deduction for partner remuneration and interest when the 44 ED is covered. So interest on partners capital and salary, which we used to, when the small firms, it was very important for asset tax planning because partners do not have higher threshold. And now even the individual thresholds also increased. So then in that case, if you opt for the 44 ED, then it is not applicable. A higher actual income may be offered, but the capital introduction should remain supportable. Now here you see, this is the $1 million question. Can I show, you are coming out 44 AD or ADA? What should be the income declared? Let's have an answer. What should be the income declared? 50% in case of profession, 6% in case of the individual, right?
6% of that higher amount.
Exactly. The word used is say the 6% or higher amount actual profit. Now you tell me when you are not required to keep the books of account, you are not supposed to prove the expenses. How you can prove or you can satisfy that whether profit is higher or lower? You are having is only turnover. You are presumptive. There is a possibility that even the GST also you are in the presumptive. So only sales is there, your purchase is not there. How you can do that?
Bank account and investment.
Yeah, that is yeah. What is that? The AC come करने का AC come करवाना okay. Yeah, see the thing is in the business it works because they have got capital expenditure etc. There are withdrawals and everything. In the profession, especially there are so many people who are instead of salary they take as a professional income and they invest the whole amount. And when you invest the whole amount, how you can show that your income is only 50%? That's a fallacy. But is there any way income tax people can catch you on this? Chances are zero because they are not supposed to ask you anything other than your turnover. In the similar way, 5% test also. Who will take the 5% test? It is self-declaration. You tell assessee might take the help of chartered accountant. Chartered accountant give me a right advice. If you give the wrong advice, you are, you can be prosecuted along with the assessee that you all know. But other than that, there is no test.
The test is that you have the AIS report.
AIS report does not.
AIS report you can find out what is the investment made. And if your investment is something of a larger proportion along with some other things, then you can easily find out that what should have been the profit.
Till now, the AI is not doing the work, but sooner or later it might do that.
Not that AI, I'm asking about AIS.
No.
Information report.
In the AIS gives you the information. And based on the AIS information and the return file, if there is the artificial intelligence in the system, it makes a study and throws out the report. These are the people who potentially are the tax evaders. That is how it's picked up for scrutiny. So, and plus, source of investment need not be your income only, that we all know. If somebody has professional income of 50 lakh, he purchases a flat of 5 crores, that doesn't automatically mean that he has earned this income and this wealth. There are so many other things. But anyway, but the principle is that you have to show actual profit or 6%. That's in case of professional 50%. If it's higher, you should show the higher one. But if you show 50% and you can, there is a 99.99% there, chances that you will get away with it. Now,
There is a person in a service oriented industry, but he does not have any degree or qualification. So will it be business or service?
I'll come on to that. There is a slide on the profession. I'll discuss that. Now this will come to the eligible assessee and exclusions. Eligible assessees are resident individual, resident HUF, resident partnership other than LLP. Eligibility is status specific and not year specific. Excluded person is specified profession under 44 AA1. If you are covered under profession, you are not covered here. Agency business or income in the nature of commission or brokerage. Goods carrying business, which is covered under 44 AE. There is a separate section for that. Person claiming 10 WA or specified chapter 60 deduction, heading C deduction, that is for the specified businesses. Then non-residents, LLP, company, AOP or other ineligible status. These are the exclusions. Here the LLP is the only thing you have to take care. Other than that, it is fine. And this is the one thing, 5-year lock-in, what is the consequences? Here, the thing is, there is this one-way traffic. You can get into the 44 AD. Once you get into the 44 AD, you have to continue for 5 years and you can go for the next block of 5 years also. And Act allows you to come out of it anytime. But changing every year is not allowed. Once you applied for 40 AD, 5 years you're committed. And if you want to come out, then you're not eligible for another 5 years. Means within the 5 block which you first selected, if you get out, then you can't enter in that 5 years block. You can go to next 5-year block, you can restart it. So when the property declared 44 AD, moving out of the following 5 years has consequences. Track the consequence assessment year-wise. And lock-in test is fact specific. And if I'm on 44 AD this year and next year there is no business, then also that block will remain. After 3 years, if you want to come back, then you can go to the same block. If there is no business 1 year, or if there is a loss, then if there is a loss, you will definitely opt out of 44 AD. Then you are once again not eligible for the full block. Identify the first estimate year in which section 44 is used and monitor the next 5 estimate years. Means first estimate year means when this block system started. It was not there earlier. Now I think it is almost 4 years or 5 years. I don't know exactly which year it was. If the profit is not declared 44 AD during that period, the benefit is unavailable for the 5 subsequent years. Discuss that. Books and audit under 44 AB arise when 44 AD4 applies and total income exempts the exemption limit. Do not treat every low profit year as an automatic audit case, because this is what we try to do, but that is what is not allowed.
Here. Last year, I've declared in 44 AD and my turnover was 2 crores. But this year, the turnover has increased to 6 crores. So 44 AD is automatically not applicable.
Right.
Last year, I have declared, since everything was through banking charges, I have declared 6% as my profit and I've got it. But this year, I have to declare extra 2% of the turnover. In a normal scenario, everything is banking charges. So tax audit will not be applicable. Correct?
No, because you're outside the 44 AD,
Correct.
or you opted out of 44 AD because of your turnover is increased.
Correct.
And you have not reached the threshold of the tax audit because there is a 5% test. If you are passing the 5% test, then audit is not applicable. If you are not passing the 5% test, then audit is applicable.
But the percentage is 2%.
No, not profit percentage. 5% of the cash receipt.
That is not applicable.
Profit, whether it's a profit or loss, 2%, 1%, 6% doesn't make any difference. Yeah.
Thank you.
These are the type of questions I get regularly.
This is the last time. No profit.
That is what, when there is a loss, you say that no, the low profit, no, I don't want to go under 4480. That's not an automatic choice. You have to see the block. That's the only thing. 4480 limited eligible SSC, ceiling was 75 lakhs, where cash receipts do not exceed 5%, otherwise it's 50 lakhs. Presumptive income remains at 50% or a higher sum claimed to have been earned, which we already discussed on that. Eligible assessee is a resident individual or resident partnership firm other than LLP, and HUF is not included again. No separate partner remuneration interest deduction is available, and it's the same thing for different. Yeah.
So in a SSE case, F&O business, there's a F&O turnover. The net profit of all losses and profit, the net profit is 61 lakhs. And if you compute the notional profit and notional loss, total turnover comes to 3.35 CR. So can we go by declaring only 61 lakh as the profit and then other expenses which he has already incurred of professional fees and salary and then compute the net profit, or we have to declare the whole turnover 3.35 CR and then we will have to debit the notional loss as well.
They don't get confused with the turnover. This turnover is for the calculation of threshold only. In your books, it will be net, either profit or loss. So don't confuse with that.
Okay, so in your book, we have to give the books of account profit and loss account. So only 61 lakhs net profit has to be.
Yeah, your F&O
Turnover
is only for the calculation of this threshold. Otherwise, in the books of account, turnover will be your either is debit or credit, profit or loss. There will be one figure. Or if you want, you can take both, show both separately to be more transparent. You can show losses in the debit side and profit in the credit side, and then other expenses and show the net as income. That you can do. That is a better way of presentation where your turnover is also captured.
It will show the profit on the credit side and losses on the debit side. So you are telling total profit, not the notional loss, but only the profit figure on the credit side and loss on the debit side.
Settlement, yeah. There is a better way of presentation. So if somebody later on also somebody wants to see what is your turnover for the threshold, he can see from your books on.
And in this case, presumptive won't apply because the notional turnover is more than.
See, that is a separate, I think I've covered a separate slide, but the subject, let me discuss that. Whether F&O can be covered under presumptive, answer is yes. Because there is nothing in the act which bars you from, not applying 4480 for the F&O business.
Yes, but in this case, that notional profit and notional loss is more than 380 CR. So.
Notional, you're talking about actual profit. Where is the notional in this?
According to my understanding, the definition of the turnover in F&O business is notional profit.
There is no notional. It is the actual profit and loss.
Which is the profit plus the loss figure.
Yes, yes. Yeah. That is why you should both separately. Add the debit and credit and you get the total turnover.
He is saying that his plus side total is 2 crore.
And minus side total is 1.40.
Net is 61.
No, net is
61. That is fine.
For turnover,
So turnover is more than 3 CR, so presumptive we cannot go, no?
You cannot go presumptive. If it cross 3, you cannot go presumptive.
Thank you.
Yeah.
No, F&O you can apply 4480. What do you mean? Suppose my F&O profit is 100 rupees. So that means I have to show open 100 rupees.
No, if you in the F&O business also can be covered under 4480. So turnover is defined. You can go for the 6% of the turnover and covered under 4480.
So my net is 100 rupees. So you say I can offer only 6 rupees.
Not 100 rupees. Your gross. Gross may be in the example which Mr. Gandhi gave, it's 200 plus 140, 341. Out of 341, you can offer 6%. For area will continue that. For which are the professions covered? Legal, medical, engineering, architectural and accountancy, technical consultancy and interior decoration. Notified categories include authorized representative, film artist, company secretaries, IT professionals, and specified sports persons. This is what is defined. And there is a notification. So there is one clause of other professional. When you drop down also, you can go for the other professional. Somebody is telling me that he is getting the professional fees and not a professionally qualified, but you can be covered under other professionals.
Now, professions can have degree, so to identify that is the profession. As far as interior decoration, architect can be said to be a professional, or any other person can also be said to be a interior decorator. Suppose by experience I become an interior decorator. Then
If you want to go technically, for every of these professions, there is a professional body. You should have the membership of the professional body technically. But anyway, I have not come across any case where, when you file as a professional, it is questioned what professional you are. Why should you not be tried in other cases? Such query never came, because TDS deducted under profession and you showed a profession, and you pay the GST also as a professional. So you are covering all the sides. That's fine.
There it is not possible, because there you are paying 50%. Suppose if reverse is right, 8%, then 50%, then there will be a penalty.
Then there is penalty. And there are many people I've seen people pay this commission to HUFs. How you can pay commission to HUF? And people have HUF or professional income. Even that also I've seen many cases. And it's suggested by our brothers only. It's not, the client is not that educative. Our brothers only suggest that you show in HUF and HUF make capital banao. So now anyway, 44 ADA specifically bars, you can't go for the presumptive taxation in that. Yes, sir.
This is the business associate of some insurance company.
Huh.
Where TDS is deducted under section 194J.
How is J? Because the insurance commission is separate.
Not getting a commission, he is a business associate.
Take
The
it.
insurance company is deducting TDS under section 194J. Because he is not the agent, he is a business associate. And that associate applied 44 AD. The department is saying ki since you are TDS is deducted under 194J, so it is the.
This is the standard call taken by the department and in the faceless also. If it is covered deducted under 194J, they say that you are covered under, you're not covered under 44 AD. Although you have been, that's what I told you, especially this is the problem with the ITES category. ITES is basically it's a business, and many people it's 90% of the ITES is manpower supply only. They supply manpower supply, they get some 5-10%. And more than 50% of the people deduct tax under 194J. So that is what the regular problem is. Anyway.
Chartered accountant doing accounting job.
Any you can go to another professional. And you can get that also you can get an association membership. You can be a ITP, income tax professional, or even the sales tax also professional you can get. There are so many places you can get it.
That professional, if I understand, it is notified.
It is notified, but then nobody questions that. Because in the drop down, you have to select one, that is other profession. And if the TDS is in a 194J, you don't get any query. Technically, I agree with you, if they are not covered under profession. And if it's covered under profession, the department doesn't take question because you are offering the higher taxation. That's why nobody questions. Otherwise, if it questions, yes, which is not notified, which is not in the list, he cannot be termed as a professional.
What about journalists and content writers?
They are all part of the film artist. Film artist is a very vast thing. They are all this film artist means not only film actors, anything to do with the entertainment industry, all professionals are covered under professionals.
Hello. The person receiving the income from social influencer, like uploading a video on YouTube and like getting a revenue from YouTube and viewer. So what type of income?
That is the professional income. That is the professional income.
Because in the
you can.
You not know. You
see,
get any degree for that.
No.
Anybody can upload it on YouTube and like that.
That's right. But film artist is a very vast definition. Film artist covers it encompasses, it covers everything.
Add on YouTube like that.
No, it covers everything in the entertainment industry, practically.
TV, OTP, everything.
Everything. So, and TV, OTT, and then the YouTube. YouTube is we should cover along with it.
Actress, makeup artist, musician, singer.
Everything, part of the film artist. Part of the film artist. There is a very vast definition. It covers all the people involved in the filmmaking, which we presume that it includes, because OTT and documentary is also covered under cinematographic films. Now, some people uploading the reel and getting the so-called influencers. I think I should be covered under profession.
What about digital marketing?
Digital marketing is different. We are talking about professional. Digital marketing is a business. Simple. And I don't know where the sound came from.
Yeah. We have got a case where we have a client who is earning out of this digital marketing, and the assessing officer is treating it just because what you said, 194J. TDS has been deducted under 194J, and they are giving a stand that why you have not taxed it under 50%.
Exactly. Now you see, digital marketing includes so many things. Are you giving only the consulting, or are you doing the actual marketing? So if you're doing only consulting, definitely the professional. That is why you must take care. If you got also you're doing the other things also. Digital marketing is only not giving the plan. You have the actual money. You buy the content. You do the hosting, and you can buy the likes. You know that, no? Yeah, photography. You have to hire the photographers, do that, and you have to website creation and all the making the pages. This is not so many work. It is not only consulting. If it is only consulting, that's right. So that you should, and plus every time if the TDS deduction 194J, you have a problem. But for example, if I got 10 clients, if 2 clients deduct under 194J and 8 clients, just for an example, then you have got a case. You say that only they are deducting, my work job is this. Anyway, that you have got a case, but it's difficult one.
And moreover, the deduction of TDS may not decide the fate. It is the real income that will decide the fate, whether it should fall under 44.
But now you see, the thing is, your income and your source is now decided by the AIS. AIS and TIS is coming. It's coming from the annual information and the TDS. If somebody said in the TDS, they said you are a professional. Department thinks you are a professional because they want to charge you, tax you at a higher rate. Simple.
कितना slide है? 75. 14 में पहुंचे 75 out of 75.
आपको जाना है क्या?
नहीं मुश्किल है.
शाम का खाना है.
No, that's later slides are all on the clauses. The clauses that we can skip. We'll discuss the issues because so that my whole idea of agreeing to take the session is I get less calls on tax or applicability. We covered this. I forgot whether we covered this or not.
Yeah, covered.
44 AE, I won't go much on that because it's a goods carriage business. Available to person engaged in plying, hiring, or leasing goods carriages. Assessee must not own more than 10 goods and carriages at any time during the year. And heavy and other goods vehicles use different monthly presumptive methods. There are different presumptive rates for the different types of vehicles. And if you are a fleet owner, more than 10, then you're not covered in that. Otherwise, you are covered here. This rate, I can skip it. No, actually, Major has already threatened me. I have to go, I have to hurry up. Now this mixed business, profession and commission income. This is where many people have got doubts. Can business income use 44AD while professional income uses for section 44ADA? Answer is yes. Eligible distinct business and professional streams may use 44AD and 44ADS respectively and simultaneously. That you can use it. Does the commission income alter the result? No, commission income is not covered in either of them. That you have to show separately. So if you got all the 3 income, you can go all the 3. So for the commission, you can have P&L, and for profession, you can go under 44ADA, and for business, you can go for 44AD.
Registered agent will follow commission of the.
It's commission. Real estate agent is not covered under any of the presumptive methods. Should professional and business receipts simply be aggregated for audit? No, because there is all the threshold limits are independent for each type of business. So you need not, if there is a business income of 2 crores, professional income 50 lakhs, then let's say 1 crore. It is not 3 crores turnover. It is a business for the professional separate turnover and business it's a separate turnover. Current approach, eligible distinct business and professional streams may use. We discussed that. Commission, we discussed that. 44 EV business, yeah, that's it. Future and options. This is what I think before slide we jumped into the subject already. So eligible exchange traded derivatives remain business income and excluded from speculative transaction under section 43. There is separate provision. Now F&O, whether it is commodity, currency, or share anything, all these derivatives transactions are business incomes. So turnover is based on the aggregate favorable and unfavorable differences, relevant option, premium, and reverse rate differences. Not the premium and the difference of premiums only. 44 AD is not expressly barred, but eligibility, business character, turnover ceiling, and lock-in period must be satisfied. Then 44 EB, your block, etc., should be satisfied. The loss allowed does not create audit. Apply the relevant 44 EB limits and factors. I added this line because I got in the last 1 week I got at least 7 calls on this. I got a future lawsuit. I am supposed to do the audit. I think this you called earlier also.
So see section 44, as you mentioned, section 44 is not especially barring this FNO. So now in this form in the ITR, there is a separate thing turnover in FNO and profit or loss in FNO. There is separate disclosure which is there. Still we can go for 4480 if in spite of disclosing there, or what is the situation?
As per my opinion is yes. And this form, what you're telling, I'm not aware. I've not seen it, so I won't be able to comment on that.
Yeah, there is an option, but see if we disclose in that the form, there is a separate listing of FNO turnover and FNO profit and loss, and if we do 4480 also, it adds twice. So now I believe or I feel that in my view, it is only either you have to go that way or this way.
Once again, when you are opting for 4480, you don't fill up the P&L and balance account. You fill up the only 4 figures: stock, sundry creditors, and cash balance. You don't fill up the this. So if you are filling up the item, then you are not opting for 4480. If you are opting for 4480, you don't fill up. Yeah, presumptive. Yes. Don't this procedural aspect is handled by my partner. So if you ask me question me on that, I may falter.
4480 lakhs, but actual profit as per broker PNL is 20 lakhs.
If you are a true citizen and if you go by the act, declaration is higher. Only thing is, 4480, if you opt for the presumptive, you got the immunity from explaining the expenditure. That is the only thing. Other than that,
if the case gets selected for scrutiny, they ask for the actual derivation.
No. But if for the presumptive, they don't ask for the expenditure.
They do.
No. If they are asking, you can definitely they send that stock questionnaire with all the parts. So you can say I'm under 4480 and not. So then they would.
My adding the broker PNL. They don't. We go in appeal.
No. They are not supposed to. Now what they do, that is secondary thing. And if every officer does which is right, then 90% of the appeal will not happen. Yeah. So if the appeal do not happen, मेरा दुकान नहीं चलेगा. I told him.
20 lakhs.
See, this gentleman wants you to show 20 lakhs. Understand that? No, see, the brokers Brokers P&L from the F&O is, I don't think it is coming in AS. So then it's not there. He only knows it. 20 lakh, broker knows it, he knows it.
Ratios at the end, the last clause, tax audit.
If it is tax audit only.
For
Yeah.
tax audit.
Ah.
How do we calculate ratios for every clause?
Same thing. That will give a totally irrelevant figure. But what I suggest is you put a note, that is qualified note, telling that ratios do not include the F&O business.
Yes.
Because that gives a clearer picture. And next question, I think, is asked by you, the GST. Whether GST forms part of the turnover? Your standard answer is no. But there is under certain circumstances, GST is part of the turnover. That is, one is when you are covered under presumptive, where you do not charge the GST separately. Then obviously GST is part of the turnover. Another one is we professionals, we account on a cash basis. So what we do is we put the gross receipts and whatever is the GST paid to claim an expenditure. So that way we are advantageous because we claim the expenditure in advance and we book the income later. Because GST to भरना पड़ता है अगला महीने, but fees तो कभी आता है, we all know that. We are
Instituting guidance for the state, it depends on method of accounting.
Exactly, that's what. If you are, because I say we professionals, we go by the cash method. Cash method, then GST becomes a part of the turnover.
Whether you are showing inclusive of GST or net sales.
That is for the others, for professionals.
For others only.
Yeah, others, yeah. It depends on the accounting system, I will do that. Because if you are collecting separately, there is no need that you should add to the turnover. If you are not collecting separately presumptive, it's automatically becomes the part of the turnover.
Supreme Court judgment is there.
सर इतना बोलने जाएगा तो महेश जी भगा देंगे मुझे.
कुछ रह जाएगा ना, इम्पोर्टेंट रह जाएगा.
चाहिए ना बाद में कॉल आने के लिए. Whether just separate we discuss that consideration रहेगा. Yeah. Section 140 adjustment do not eliminate the need for the documented turnover basis. Use of state turnover basis consistently for 44AB presumptive taxation and 46 clause 40 in the return. Means you can't switch over anything, continuously do that, and if their accounting system is supported by that, then you can exclude the GST from turnover. Some of the qualifications I've covered. Basically, limitation on and stock records. Because now my partner Manish Gadia told me about the recent case in the GST where the heavy demand is raised and they raise demand based on the fuel consumption on a sweet vendor, big sweet vendor, because he didn't have the stock records. They denied having any stock records. They said that we are in the sweet meat business, we don't have any stock. So that's why you don't keep any stock record, because whatever is manufactured is sold. If it is not sold, it is destroyed because you don't have shelf life. That way they declared to the GST. So GST said your books of accounts are not maintained because you have not maintained the stock records, and they raise the demand. So this is, we give the qualification that stock records are not maintained, and that standard small qualification by us to save ourselves can lead to serious complication in the GST and other areas.
Demand on which amount they are raising?
They raised, on the fuel consumption, they did it. On the gas consumption, they said this much gas is sufficient to prepare this much sweets. Based on that, this is the sweet value, and that they made the presumption based on that. It's quite an interesting case, but I think majority of us gives the qualification that stock records are not maintained because we can't give the data. You tell me how many people give a qualification stock records not maintained in the tax audit?
Not properly maintained.
Yeah.
Not properly maintained.
Not properly maintained. Yeah, I think that is a better way to maintain. Other than telling not maintained, not properly maintained is a better word.
Very guess you can give stock.
I said that is a matter of appeal. Appeal is going on, and so but that is what it is. Now I think you must have seen the now FTA going on very much. That's incidentally, the one person who went to the High Court is my client. So he told me very simple. They came when they were cleaning the kitchen. After the busy period, they were cleaning the kitchen. They were washing it. So they did the video of the dirt in the ground, and they said that is the dirty, and they could give the closure order. So people can do anything. So you should be in the position to do something. If you go as a guest to any building, there is a watchman is a boss. He may not allow you. Then you have to do all the circus to allow yourself, right? Yeah. So every position is like that. So record observations, qualification in paragraph 3 of 3CA and paragraph 5 of the 3CB with relevant 3CD clause numbers. There are some drop downs and others. So I suggest that whichever things you are not clear, you should qualify. That should not be. And after this qualification which came into the tax report, I've completed so many assessments. None of the assessing officer bothered about the qualification in the tax report. None of them. Because the data which is entered in the clause are captured by CPC and captured in the evaluation. But your qualification is excluded between you and no, assessee also. You tell me which assessee reads what is the qualification in the tax report. Nobody reads it. हो गया आप तो सही कर दिया हो गया आप डीएससी भी आपके पास ही रहता है. So evaluate materiality, sufficiency of evidence and incomplete stock quantity records and identify estimates, expert work, legal interpretation and system implementations relied upon and use annexes where needed, but keep the e-form observation complete and cross-referenced. That is, cross-referencing is very important because if you make one small qualification and if it is not in the captured in the statement of income, CPC will catch you. And plus, one major thing in the TDS, if there is an anomaly, if there is a mistake or a non-deduction, you better qualify in the qualification and don't mention in the chart. The moment you mention in the chart, then you'll get the notice from the TDS department. They get this data. You get the notice from there. And if you say that it is not deducted, put on the qualification, nobody knows. It's covered permanently. Now, this is the one thing. Revision of tax audit report and due date. Can you revise the tax audit? Yes. Oh, everybody's done it that much. So, the revision of tax audit certifies your professional inefficiency. Remember that. So you should give the reason to explain you are efficient. There are some external reasons. That's why you are revising. That much you take care because there is a serious lapse if you really revise a tax report. Reason when considered for revised account retrospective laws, change in interpretation and system software error as possible reasons. Revised accounts is the main thing because there will be, for some other reason, if the accounts are not completed, you can still file the tax report and based on the provisional account and file the return so that you stop the clock there. Because if you give the audit to Big Four, they don't care about the due date. Audit is done at their own time. So that time it will be necessary. That time, once the books are completed, you can revise it. Then if there is a change in interpretation, any high court judgment or any court judgment based on that you want to take a benefit, etc., you can do that. And 90% of revision we do because CPC catches you. That time you said, okay, we'll revise the tax because you can't revise if you without revising the tax report, revise the computation of income only, it is not accepted by CPC. So that time you are compelled to revise the tax report. Then asked how to deal with the 43 payment after tax audit but before return filing. This is the one major thing which happens. So usually that is why although tax audit is ready earlier, we file the tax report along with the return so that this issue is not there. General tax due date for 2027 is 30th September 26 this year for the general. That means when you are in the transfer pricing, you get 1 month extra. Rule 63 permits revision before the end of the reinvestment year, where later payment changes difference under 40 or 43B. ICA guidelines recognize the reverse accounts retrospective law and changed binding interpretation as revision triggers. Use the same auditor, refer the earlier audit report, state reasons, sign with the current date and generate fresh UDM. This is the procedural list to you. See that if somebody, one person has signed the tax report, revision has to be preferably done by him only, not by the second, all new person. Then you have to generate a fresh UDM, and stating reason is compulsory. That you should be very careful so that the blame should not come to you directly. This is the transition provisions I just covered. So now this time whatever we covered is as per Income Tax Act 1961 for return and tax rate preferences. So tax rate total is in 3CA, 3CB and 3CD. General audit report due date is 30th September. For 26 year, the tax year 26-27 new act, it is from April 26 onwards, tax service provision is section 63 and form 26 replaces 3CA, 3CB and 3CD for the tax year commencing from 1st April 26. From 26 uses part A to part D and trigger based schedules. And we have not covered any of the clauses of the form 26 in these slides. Now there is clause by clause, some important points. As the time permits, I can continue. And if somebody wants to leave, I don't have any grievance. Mahesh ji already जा चुके हैं, तो कोई दिक्कत नहीं है. Yeah. Name the assessee, that state the complete legal name exactly as appearing in the PAN and e-filing profile. So if there is any change, you should change the profile, but you can't use different here. Especially with the names, we have got a lot of problems every time. And earlier, site used to take whatever name you type, it used to take the return and tax certificate, everything. Now it doesn't take. If it doesn't matches with the database, there is an error. When name change during the year, ensure statutory records and filing profile support name is used. So first see that your profile is updated so that whatever is the change names you can use. Then confirm succession, conversion, merger or reconciliation before finalizing. This is succession may happen because in the first year they allow the return to be filed. So in the tax report, succession problem may not come because next year the business may not be in the same name, because after 1 year you have to go for the estate. You can't continue as with the same assessee. Conversion, there is a separate procedure for that. And up to what year you can file what return, etc. That you have to take care. Merger and reconciliation, everything. You have to see that your profile is right, then upload the same data in the tax report. Trade names or business names are not substitute to the legal identity. So one person can have multiple trade names, and you have, as a proprietor, especially your trade names are different. And in the balance sheet, you may write the trade name and the proprietor, etc. But in the tax report, it will go in the name as per the profile only. Address of the assessee identified in the clause 1. Location where the books are kept are reported separately in clause 11. And that is so. And then address is communication and identity field. There is also separate field is there. Report the complete current address as per PAN e-filing. For the main address, you put the as per e-filing master only. And for other locations, you can include the city, state PIN correct and code correctly. Do not use branch, factory, project or accountant address unless it is official address. Means for the books of account kept and communication, etc. You can't give the name of the managers and everything unless your name is there. And if there is a branch or anything, you should confirm that it is also there in the GST. Although income tax do not mind that, but you should better be, because then after GST might send a notice based on the income tax data, because data is shared. Permanent account number, report PAN correctly, use Aadhaar only where the form permits it. With now, as on today, Aadhaar is considered as alternate to PAN, but wherever it permits, you know, verify PAN status, name and jurisdiction before filing. And that many people must have last year faced it because PAN status becomes invalid if you are not linked with the other. And the tax, TDS people have sent the notices for the demand. So you, before filing, you also check whether PAN status is valid or not. For a successor and converted entities, confirm the correct PAN of the reporting assessee. Even the successor, you know that how the succession works, right? So under the legal heirs PAN, this PAN is also merged. So when you're reporting as a successor, you should report the PAN of under whom the successor is assessed. Indirect tax registrations. Last GST and other indirect registration numbers relevant to the previous year. Ensure statewide GST registrations are not missed. Reconcile with GST profile and books where multi-state operations exist. So now it's other than GST, there is nothing. In case of only special liquor business and restaurants, you got one more license of the excise duty. Other than VAT and excise duty for liquor people. Other than that, it is for the general business. It's only GST. And we add the profession tax registration also in this. I put it there. And there is some people take a call that it is not required. Anyway, there is no harm in putting and plus your other registration under PF, EFA, etc. is not covered here because it's only tax registrations. Status, reporting the status as applicable under the income tax last year. Confirm changes such as partnership to LLP, form to company or amalgamation, etc. Use the status consistently in presumptive section and audit trigger analysis. Status, if you make a mistake, it will throw you out because while processing only, it will give the error. Previous year, this is the last year, we'll be talking about previous year. Now next year onwards, it will be only tax year. For 6-7, previous year, there, I think I'll skip this. Assignment year. Nothing new in this. Renowned clause of the 44AB, which we discussed in the detail, where you have to cover. So I won't go further in that. There's a drop down. You have to fix. You have to select which fits you best. And I think multiple also. Yeah, if I got multiple business, multiple selection is also allowed there. Option under concessional tax regimes. This also nothing new to discuss that. 10 IB, IC and other things are still, some of the things are still applicable. That if it is there, you can fix it. And on BA, BSc now become redundant because by default it is the new scheme for everybody. Corporates you have to select. And new scheme is beneficial. Other than, only some people, some people who was having maximum HRA is the only people who are still in the border. Other than that, that old scheme is practically redundant. Partnership ratio, and in case of there is a retirement, admission or reconstruction, you have to take care of it. And we are all software driven, and if you go to the software, this data comes import from the last year. So there are like cut paste errors, this import error also can happen. You should go through it once. Nature of business. So state the principal line of business or specified profession clearly and report material changes, new verticals and discontinued activities. Use activity codes and narrative consistently with ITR and GST records. If there is multiple HSN codes you are operating upon, you do that. There is otherwise, if you're trading in multiple products, you need not write all the products. If you're doing trading and manufacture, add both the clauses. And if you're doing profession, business, everything, what is the line of business? But only thing is suggestion is that you cross-check with the GST registration before writing the nature profession. Books of accounts and locations. And now, as per the new act, there is a stringent rules regarding the books and backups and it should be kept in India, etc. That is not applicable for this assessment year. It's applicable for next assessment year. So I think Tally is giving you all the customized solution for all that along with the certificate. If you are having a license, the Tally. But now I think majority are having license Tally. Otherwise, but Tally also throws you out. It doesn't tally. State books of accounts examined during the audit, where books are centralized, hosted, or cloud-based document access and control evidence. You have to write that everything. Presumptive taxation section. This we covered. I will not go through it again. Method of accounting and ICDS. So ICDS is a separate subject. If here there is a drop down, if it is not applicable, we prefer you write not applicable other than keeping it blank. This is what our suggestion is. So I think otherwise, if you want to fill up only which is applicable, we can fill up only applicable. Left to you. It's all drop down, all ICDS comes in the section. Reports ICDS deviations that result in increase and decrease in profit. Retail ICDS wise reconciliation rather than net adjustment figure only. Here, this ICDS adjustment biggest problem is you do adjustment 1 year, reversing in the next year becomes a bit complicated. So there you make an error in reporting, CPC will end up adding both the things. So there you should be careful because you should report only the net difference so that it doesn't make a double addition. And there are certain things which are covered in more than one clause, ICDS as well as some other clause also. If you report in both places, then the CPC will make additions of 2 additions. So then you have to go for the rectification. The rectification is not possible only if you revise the tax year report. So this ICDS adjustment, you should be very careful. Valuation of closing stock, state the valuation method of our inventory classes. Report deviation from section 145 and their effect on profit. Reconcile valuation and inventory records, costing workings and financial statement is the practice tips for you. And the 145A was very confusing thing for all professionals how to write the adjustment, etc. So my practical suggestion, if anybody is confused on 145A is, you ignore that. Nothing will happen. Ignore the 145A, you are good. And if you really want to do that, you have to do the very huge reconciliation, adjustment, etc. And finally come to the same figure, there is no effect. You should come to the final of no effect. Capital asset converted into stock in trade. So report each converted asset separately, state conversion rate and amount recorded in the accounts. Maintain valuation support and 45-2 computation trail. Because what is the repercussion of capital asset converted into stock in trade, right? So you pay the capital gain tax based on the conversion rate, but when you sell the ultimate product. So this is more applicable in case of real estate where your investment, land investment is converted into stock in trade, but you don't pay the tax on the date of conversion, you pay the tax on the date of the ultimate sale. So tax rate also captures it, that you should be careful. So this is good because earlier there is no way you can capture this type of conversion. So afterwards, we now at least it's recorded. So it's clearer now. Amount not credited to P&L account. Report sections 20 item is not credited to P&L. Report refunds, drawbacks and escalation claims admitted as due. Report other income and capital receipts not credited to P&L separately. So when you are reporting here, remember that this should be reflected in your statement of income also. This is very crucial. All the tax report, when you report under that clause, cross-check with your computation of income. Otherwise, you'll end up with a demand. When you end up with the demand, once again, I will remind you again, you cannot just revise the statement of income, you have to revise the tax report. Then that it comes with its own ifs and buts and consequences. Transfer of land or building below stamp value. This is also now covered under tax audit. The substitute clause adds yes, no field for specified provision of particular CA1 and 56 to 10. 43 CA1 is when you're selling it's a business income, 52 is not a business income. Report properly identification, consideration, and value adopted, assessed and accessible. Report the transaction even where the tolerance provision may prevent addition. But you know the tolerance of 10%. So there may not be addition, but you have to report in the tax report. Reconcile agreement date, registration date, payment mode, and stamp valuation records. Here when you report this, the problem is there is a exception as of 43 C as well as 5210 when you enter into agreement and register later. So that is not captured in this form. But when it is reported here, I have not come across a case where the automatic addition is done anywhere because that is already covered in the your statement of income. If anybody has come across anything, they can tell me. Because of this reporting, any adjustments made? Depreciation clause contains transition WDV rows for BA, BC, and BAD specified AOIs. If you shift there, then the your WDV will change because of additional depreciation. So that transition provisions you have to take care. It separately requires adjustment for exclusion of goodwill and adjusted WDV because the goodwill, because the change in act went out of the tax your fixed schedule. Continue blockwise reporting of WDV additions, deductions, put to use, and depreciation. Reconcile foreign exchange subsidy grant and legacy settlement adjustments. So these all items are separately captured there. So blockwise, you got an option to have multiple. One item, you can have two blocks also. You want to segregate one machinery separately in the book sheet separately. You want to segregate here also, you can do that. But if at your own risk, because that time if there is any surplus in the block, automatic adjustment may be a problem. But take care that last year's closing and this year's opening matches. If there is any mismatch, CPC will send you notice. It should always match. And which one? See, foreign exchange, there is a 43A is there, and there are separate sections where how to account for the forex fluctuation, etc. Because that is not in the book sheet is separate, income tax is separate.
Subsidy.
So subsidy also, subsidy grant years and how to adjust it in the book sheet is separate, here it will be separate. All that has to be separately adjusted. These are special items you have to take care. Even the legacy settlement adjustment, if you have got anything, old one, that also comes here. Majorly, I got faced maximum problem here is if there is minor change in the WDV, opening and closing WDV, because it's sometimes it happens by, you don't check everything. If your juniors checks the opening balances, there is some error, then CPC catches you. The same thing with the stock also. Amount admissible under specific sections. This is amount, there is nothing special to discuss in this. Employee fund, now law is all clear. After so many litigations, now there is no confusion about the disallowability of 43B. So current legal position is employee contribution paid after the welfare law due date is not rescued by 43B. Disallowances and ineligible expenditure expressly covers offences or prohibited acts under the Indian or foreign law. Earlier it is Indian, now it is foreign law also is covered. Now, offences and penalty. See, penalty and penal interest are two different things. So penal interest is not disallowed. Penalty is disallowed. Any word, if anything used as penalty is disallowed. Continue reporting for the A, B, C, anyway, that's fine. State nature. MSME interest and payments to micro and small enterprises. Here, we had a lot of discussion on this. Now, you are supposed to have biannual reports on MSME transactions to be filed. And how many of you filed that half-yearly statement? It may be the big corporates, right? So corporates file, non-corporates do not file it. And plus, now the payment of MSME, whether you have done within the due date, whatever is outstanding, whether it's further paid in the due date, these all things are there. There, when it started off, we had a lot of discussions, a lot of seminars, etc. But in the practical field, it didn't take off by anything because I have not seen anybody coming back with me. There is addition because of non-reporting, reporting, etc. So if you have got you don't have the clarity on the data, it's better to qualify. They don't have the data, and if you then practically nobody bothers you further. It's better than, and if somebody has filed the biannual returns and returns, then you report it here properly. You should match with those returns. If they have not filed, then you have got a liberty to report, not report, qualify, whatever it is. But if it is already there, filed with the MSMED, then you have to follow that. You have to match your books with it. You can sell and file it.
So that report includes any time during the year also.
Yes,
exceeding this.
that is why I said reconciliation.
But here income tax we have to give only 31st March.
Income tax you have to give is what is outstanding as on 31st March and further whether it is paid or not. So that's the only thing. But if it is reported, you have to reconcile with that. Then report here. If it is reported there and you say you don't have the data, that won't work. That should not work.
Any penalty for non-filing?
No. There is a penalty. There is a penalty. But whether it's levied, I have not come across anybody levying penalty.
Act says that it is no.
It is, Act says the penalty. The penalty is there. And penalty is not small. It's quite huge. And that's a penalty for non-payment also. Non-payment of interest also. And we are all covered in MSME. Keep on हमको पैसे देता है time पे. हाँ? But see, that is our on the paper. It's not implemented that strictly by the authorities. That's why everybody takes for granted. That's what we call law and practice. So law is penalty is there, practice it is not there.
As a compliance, they have to.
Yeah, and
they are making the payments as well as interest also.
And plus, that is the best thing. When we started off with the license Raj, everything was to be confirmed and certified by the officials. Now it is not there. Now it is all self-declaration. So government is giving you so much of liberty to declare proper thing. Then do you declare rightly and present if you want. Otherwise, so who is there? 20 lakh dono दिखाने का 6% दिखाने का. You can take a call on that. Yeah, report interest inadmissible under the 23 of MSMED Act. If it is paid, then only it's inadmissible. If it is not paid, there is no question of reporting. Report total amount required to be paid to micro and see, there is MSMED Act, micro, small, and medium is here for the disallowance. There is not all the 4, it's only 3. That remember that. Under section 15, split the total into amount paid within section 15 time, amount not paid and not paid, so inadmissible. Use vendor-wise Udyam status, acceptance date, agreed credit period, payment date, and aging. Now, once you get the Udyam registration, it's not that it is by default, it's for every year. You have to renew every year. If it is not renewed, you are not registered. That you remember. So that is just stand. If somebody is registered also, you can take the stand. If they don't give you annual renewal certificates, that means they are as good as not registered. What A to B, this is the, when the tax audit started, this started. So report requirement, identify each specified person with PAN, Aadhaar where available and relationship, state nature of payment and amount paid and payable. Use separate rows for materiality, different payment to the other persons. Yeah, anyway, that is nothing to discuss on that. Amount deemed to be profits and gains. There is a specific sections. If it is something covered, you can report that. Chargeable under 41. So this review, what is the reporting requirements are there? You review old creditors, write backs, refunds, and recovered bad debts. Report amounts chargeable under section 41. Reconcile with P&L and other income and balance sheet liabilities. Remember that 41(1) covers. One covers only the revenue write-offs, not capital write-offs. Okay. So you here and plus precondition is they should write off in the books, then only it is covered here. If it is not, you know that it is not payable, they are not writing off, then it is not covered here.
No, and we have written in profession also on credit side. Also, we have reported on a tax audit and government is charging twice than.
That's what I told you. That is what the biggest problem is, that you report, you report here and there both. So then they will charge you twice. So what you have to do is in the computation, you have to add back and then deduce. After that, in the computation, you do the adjustment plus minus. Then double addition will not happen. Yeah, you can correct your return. Internally, you can correct. I was add back and then show it as income under 41. See, because your problem is because P&L already contains that income, and 41 also you are reported separately. So that you reduce income considered separately, then add under 41(1). Then it will be error free. We'll cover this. Then next is 43B. Report liabilities covered under 43 by split opening current year liabilities and paid and unpaid. See, this reconciliation it should be very careful, because here once again CPC will catch last year's closing and this year's opening. There should not be any difference. Last year's closing, this is opening, paid, then what is still unpaid, and the current year separately. There is a separate process. Reconcile with the return of income also, and see that you are not caught in the wrong side by misreporting. Because these things are very clear. We don't have any practical difficulty in understanding this or the resonance. But while reporting, if there is small error also, it will lead to a double addition or some nonsense situation. For most 43 items, payments by return due date may be relevant. 43BH, return due date relief is specifically excluded. Remember that. We discussed that MSME. Then state whether indirect taxes and levies are routed through P&L account or not. Because 43B covers if it is not routed through P&L also, which is not part of the revenue also is covered under 43B. Annual credit and period items. The current printed clause has not replaced Senvat with GST input tax credit even today. Maybe in the next year when the Form 26 comes, it may be different. Even today, it is showing Senvat credit only, not GST ATC. Report legacies utilized and accounting system where relevant. If there is any legacy items, you can relevant that. Other than and report prepaid income, I have explained it under clause 77B if there is any. And once again, you should match with your P&L account. A P&L account, you have taken a call that it is not prepaid, crystallized during there, it's current year expenditure, then you need not report here separately. GST matters may affect accounts 43B, 145 and 44, but should not be inserted into clause 27A without form support. There are multiple items which gets reported in multiple places. You should be there is where you should be very careful so that you don't end up with the multiple additions. Not applicable in the current Form 3CD. Reported clause 28 has been omitted from 3CD with different Form 425. There is no current e-filing field under clause 28. Do not preserve the old table merely for continuity. Consider any surviving tax effect under the operating provisions and tax computation. Clause 28 has become practically redundant, that's why I said that. Similarly, clause 29 has been omitted from 3CD from 1st April 25. Well, this clause is omitted, but clause is there in the form. There is no current clause 29 reporting field. Historical years remain governed by the form applicable in those years. Continue to evaluate clause 29, 29B where the facts required to do that. 53(2)(9). Reporting requirements, answer yes or no whether an amount is includable. That is, ask whether any forfeited advance or other amount is taxable as income from other sources under section 53(2)(9). If yes, describe the nature of income and forfeited amount. Generally concerns money received in negotiations for transfer of capital asset. Report the amount chargeable and use transaction-wise detail where needed. Often hidden in advance or deposits. That's If it's 210, once again, it's a similar thing. Answer is yes or no on whether amount is includable. If yes, then you have to give the status, state the nature, money, and immutable property or specific property, whatever it is, and report amount chargeable and preserve valuation and exception report. That valuation report, etc. You need not upload, but you should keep it. That's what is the practice suggestion. Hundi borrowing or repayment. Report each borrowing or repayment falling on within the section 69D. State date, amount, counterparty, and nature. Include interest repaid otherwise than through the account pay check. We avoid giving any report here because if you report, it's a 100% addition item. So try to avoid it, and if there is something reportable here, then you can qualify that. That's a better way than doing the addition. I can't put it in the slide, I can tell you that. Secondary adjustments 92 CE, I'll skip that because for this I have to discuss the transfer pricing also. If the in principle, if there is a primary adjustment accepted, then it can lead to secondary adjustment. That also you have to report here. Interest limitation on 94B applies where interest or similar expenditure referred to 94 exceeds 1 crore. Section 94B restricts reduction of reference to 30% EBITDA. Carry forward tracking is required. So this is the new provision we started 2 years back. So especially in case of foreign companies where the investment is there, so interest is not allowed. If it is less than 1 crore, it is fine. If it's more than 1 crore, you have to see whether it is 30% of more than 30% EBITDA or less than that. It's restricted to that, and it is allowed to be carry forward. It's only in case of interland transaction and transfer pricing items, these are there. Other than that, in the normal things, it is not there. Impermissible avoidance arrangements under GAR. It's in abeyance. The abeyance ended on 31/22. Clause 30 is operative. Answer whether the assessee entered into an impermissible avoidance agreement under section 96. Once again, this is with the vis-a-vis. Although there is no restriction of GAR only for international transactions, but this all reporting is vis-a-vis international transactions, international agreements only. If you have discussed the arrangement and aggregate tax benefit to all parties, document the basis for a no response in complex restructuring financial service cases. GAR is a separate subject by itself. Unless you got any specific case, you can just skip that. Loans, deposit and specific transactions, reporting requirements, 31 BC, etc. now require amount together with the nature code. There is only difference. Supplies codes A to L for cash, non-account pay instructions, transfer, conversions, journal entries, and other modes. Retain party PAN, Aadhaar, amount, mode, and etc. outstanding data with you. Cross-check section 27 ST reporting with SFT and other information statements. That is SFT is one reporting which do regarding this, and one more is DPT3, which is reported with the Companies Act. So when you're reporting this, you compare with the both, reconcile, and then report here. Losses, depreciation, and speculation losses. Clause 32 captures loss and depreciation with reference to the concession regime, all the board. Report brought forward and current year losses is set off and carry forward impact. Track speculation loss, specified business loss, and deemed speculation under section 73. Reconcile with the return schedules and previous orders. Here you have got a column there whether the assessed loss are reported your return loss. So you can report both. And if the assessed loss is not accepted, then you can carry with the return loss only. Reduction under chapter 6A, I think this is practically redundant now because nobody claims any reduction. Other than that, 80JJAA. This is the only one, deduction which remained. I think this finance minister must have overlooked it because that is used by only the service industry. Manufacturing industry, addition to the employees are very less. In the service industry, people claim substantial benefits on that WJWA. It's a matter of time before they plug that also, because now there is hardly any concession remain for anything. So clause requirement capture reduction admissible under specified chapter section other provisions. Report each section and amount claimed admissible. Require section wise amount claimed and admissible. Verify certificates, payment proof and statutory conditions. Supporting eligibility conditions are critical. Reconcile with the return schedules and tax computation. TDS TCS compliance now this is continue reporting 10 section nature of payment amount tax directly collected and deposited. Use the latest correction statement for TDS TCS return reconciliation. Cross check with 20CS ES and ledgers for tax computation, and document cases where TDS is on gross including GST but income is recognized net of GST. Still there is a possibility that some people deduct TDS on the including GST, so that you have to keep a track. Then you can, for the TDS data, you can directly import the console file, and it gives a console file import, then reconcile with the other AS and 20CS and AS, etc. Then you are good to go. It's actually this clause is more clerical, and if there is an interest paid and payable, so it should also match. If you don't report something payable which is not paid, it should also match. Ideally, you should reconcile and don't keep any loose ends, and you can report it. Deemed dividend. Anyway, anybody reported deemed dividend till date? If somebody has done it, kindly raise your hand. And this, I don't know whether it's by choice or otherwise, but nobody reports deemed dividend. It is only caught by the income tax officer, then the deemed comes into place. Because there is, there is one clause in the deemed dividend in the ordinary course of business. So if anything else, if nothing else is there, we'll put it under ordinary course of business and ignore it. Buyback of shares. So there is, 36B incentive with effect from 1st April 25. Answer whether an amount was received on buyback shares covered under 222F or not. Report the amount received and cost of acquisition of the shares bought back. Use company's buyback particulars where multiple transactions exist. Cost audit. Ask whether cost audit was carried out for the previous year. Focus on disqualification or disagreements reported by the cost auditor. Relevance depends on industry and cost record applicability. The report required is simple answer yes or no. If yes, report every disqualification or disagreement. And describe the matter, item, value, and quantity of cost audited position. But there is a, so what happens is cost auditor's report do not come when your tax audit report is ready. It comes late. So in that case, you can, you have to refer to the earlier year's report only, because perennially it doesn't match with the timing. It comes late. You can use the earlier one. If the current is available, you can use that. Audit under Central Excise Act 44. And that is, you have to just say yes or no. If yes, report the disqualification, disagreement identified with the excise auditor. Describe the matter, item, value, quantity, and audit reference where available. And I have not seen any assessment where based on this reporting some mention is done or etc. It may be, if there is a huge amount, it may be picked up for scrutiny. Otherwise, CPC do not make an adjustment on this process. Audit under 72A of the Finance Act. Here also you read yes or no. If it is any qualification disagreement, you have to do that. So you have to review whether legacy demand or refund affects accounts, contingent liability or cost particular. Accounting ratios. This is just filling the form. I don't know what is the relevance of it, because if you are having the same business, similar condition every year, ratio may match. Because earlier, when we started our practice, that time UOs used to match ratio. If that same ratio, they allow. So the elderly people, elderly businessmen, even now they say, no, मेरा GP change, profit change हो गया, income tax वाला पूछेगा. So that is now legacy item, it's not the issue. But these ratios are there. Ratios are there in the now, even in the financial audit also you have to give the ratios. And here also you have to give the ratios. Only thing is, what you do is, if it is financial accounts are audited under the Companies Act, you match those ratios with these ratios. Otherwise, these ratios doesn't have any significance other than the filling the form. And if you don't fill the ratios, also I have not seen any query anytime. Demands refunds under the tax laws. This is just a reporting. If there is something, you can report. And here also, once again, if there's a tax is audited accounts by the company sector, anything, you match with the audit report. Audit report also you have to write this, that you match here, reconcile and file it. 61, 61A, 61B. Here also you have to say whether yes or no. And if yes, report the IDT, REN and type of the form. Report due date for actual filing date. State whether all reportable details transaction included. List of omission if not. So see the 61 form, it's all the forms are specific forms. You are supposed to file only if applicable. But there are certain cases when not applicable. If you don't file, they send the notices. And SFT notices are attended by the additional commissioner and above, so that their harassment is of the next level. So we should be careful. So I suggest all my clients, whether any reportable item is there or not, you file a nil return, SFT return, so that you don't end up with, and that reference you give in the tax set report. Country kind report, this is only applicable in case of transfer pricing, so you can ignore it if it is transfer not there. And GST breakup of total expenditure. So this, when it was introduced, we had a lot of seminars on this. But as I said, not very significant, because based on this, any additions or adjustment based on this, I have not come across. If you have got data, give it. If you don't have data, qualify it. That doesn't have much significance. But don't write it not applicable. If it is not there, qualify, then you don't have the different detailed data. And if you're filling it, you are to match with the full P&L. Don't skip some P&L item. But that, once again, mismatch will be there, because GST is not only on the P&L items, it's also on the asset items also. So it's a bit complicated. But you can take a stand, and that stand you report in the, put on the qualification what stand you have taken, and you can give the data to the extent available. Some practical conclusions listed by us. Employee PF, ESIC, employee contribution must meet welfare law due date now, no other due date. 43B does not cure. F&O loss, I said, once again, I'm telling you, a loss does not by itself create tax audit. Applicability of section 45 BA and other lock-in effects, which we discussed. GST turnover, where GST is separately accounted as liability, generally excluded from the turnover, and document the basis accounting system. And reporting point, MSME payments timing now requires vendor-wise evidence and 43-batch reconciliation. So this is a tough call. You see how best you can do it. Clause 29, 30, 36 do not preserve omitted legacy fields in the current form F3CD. Clause 36B to 44, new buyback and active GST expenditure reporting require current year data capture. Senior review checklist. This is prepared by my partner, so I just read it out. So applicability and computation, document exact section 44AB link and turnover gross receipt computation. Perform separate 5% cash receipt and cash payment test using the full population of data. Reconcile presumptive sections, eligibility, lock-in, and profit actually offered. Confirm FY26, AY26, 27 is under 61 Act forms, not Form 626. Reporting audit evidence, freeze a clause-wise data request list and map each field to books, returns, and external evidence. perform analytics of section 40A, A3, B43B and other sections, obtain vendor-wise Udyam evidence and a defensive clause 20 to 26 reconciliation to support you. Reconcile GST expenditure categories for clause 44 and document methodology. What we do is usually tax audit, we are not that particular about documentation. What I suggest is be very careful about documentation. It's you must be knowing that 1 year back, NAFRA has called somebody for the tax audit also. That it's a very peculiar situation. So whether NAFRA catches you or not, but documentation should be complete. And nowadays you need not worry about where to keep the file, where to store the papers, etc. Because you can keep everything digitally, and digitally maintaining the data is accepted. And nobody asks you to present any original data anytime. If you give the digital signed data copies, that is accepted. So don't be confused in getting the paperwork, complete the paperwork, get all the documentation complete and save yourself, because if there is any problem in the tax audit, your client will search another chartered accountant where you will run. You have to save yourself first. Otherwise, we are, of people of my age, not the young age, I'm not talking about my age, we are tuned to, help the assessees to their interest. But if there is any clash with his interest and anything, then he will go to the next person. He will not support you. What we as a professionals are good till the last case we have won. And if you lose one case, there is another chartered accountant ready to take over the file. So bottom line is that take care of yourself. Documentations are the only thing which will save you, nothing else. Take care of yourself, keep proper documentation, and happy tax auditing. I don't think anybody's in for any question and answer. We have already covered it. All right, we'll take it over. Tell me.
Vendor-wise, of the.
Well, I think I told you earlier also. If want the procedural aspect, I won't be able to answer the cross question. You can call me tomorrow. I'll put it to my partner. He will explain you that. Okay. Thank you very much.
Good afternoon, friends. So thank you, Haridas ji, for giving us the deep details of the tax audit 44 close and the close by close, how we can fill the form, and which will help you to do the tax audit preparation from today onwards. So on behalf of the JB Nagar Study Circle, I request Bhavish ji, Deputy Convener, to give a vote of thanks. Thank you.
Thank you, Vijay, for giving me opportunity to give vote of thanks to learned speaker Haridas Bhat. He is from our own CP study circle, founder member. So it is, and his topic which has been covered for the tax audit, close price, close detailed analysis, and what to be reported, what to be taken care, has been in detail explained by him. We have to carry out with a loud applause. We thank you, Haridas.